Hi, this is Michael Regan with the Regan Team Home Loan Group, and here's your weekly update for the third week of January 2026. First up is existing home sales that were up 5.1% month over month, and they're up 1.4% year over year. Now, the median home price is $405,000, which is down a little bit month over month, but it is up year over year. Now, the thing to watch for is months of supply is at 3.3 months. Well, typical normal supply, just a balanced market would be 4.6 months. So that shows that in many areas, it's actually a seller's market. Now to new home sales. So new home sales for the month of October, and we are delayed because of the government shutdown, showed that month over month, we were down 0.1%, but we are up 18.7% year over year, which just blew expectations away. And it just showed that as rates came down last year, home sales really picked up. Now to what the market's doing. So we're down 28 basis points today, and we've been down about 50 basis points in the last couple of days. And as you'll see in the chart, red is bad for rates, green is good. So we were, rates were great, seeing all the headlines, and then all of a sudden we've come down and rates have gotten at least 0.25% to 0.5% worse. There are two main reasons why interest rates have gotten worse in the last week. One is the Japanese government. They introduced a plan to increase their amount of debt, meaning they're going to have to sell more bonds, and the bondholders never like to hear that the government is going to increase their debt load. Number two is the threat of tariffs. Anytime we run into tariffs, the market is anticipating that if that happens, you could see inflation pick up, therefore bad for bonds, because anytime inflation picks up, mortgage holders don't want to be stuck with a fixed rate of return when interest rates and costs are going up. And be on guard because the media is always behind. You're going to see headlines showing one rate that doesn't exist anymore because they've gotten considerably worse in the last week. And just know this is part of the normal market cycle and you can't predict interest rates. The good news is interest rates are significantly down from what they were over the past 3 years. So now is a great time and you're seeing the market start to heat up now that interest rates have dropped. That's it for this week's update. Have a great week and I'll see you next week.